This is Horizons Middle East and Africa. Our top stories this morning. A win for Nvidia. President Donald Trump approves sales of their H200 AI chips to China, with the U.S. to take a 25% cut of the revenue. Takeover battle. Paramount launches a hostile cash takeover bid for Warner Brothers just days after the studio agreed to a deal with Netflix. And we are live at Abu Dhabi Finance Week, where we will be speaking to Parag Khanna, AlphaGeo founder and CEO, DWS CEO Stefan Hoops, and Circle CEO Jeremy Allaire. Plenty to get to on the second day of ADFW, but for now, it's just gone past 9 a.m. across the Emirates, 7 a.m. here in Johannesburg. I'm Jennifer Zabasaja in for Jumana Bersechi, and as we have been talking about, there is plenty to get to this week as far as central bank decisions go. We just had the RBA coming out with their decision ahead of the Federal Reserve, which we'll wait for on Wednesday. But still, if we take a look at some of the price action, it's seeming like it is a bit risk off if we look at where we're at right now. At least if you take a look at U.S. equity futures, they're pointing slightly higher. But on Monday, we did see most of the major U.S. indices closing lower on the day. Tech, though, being strongly the winner that we saw, the main sector that was up on the day on Monday and after hours, as we were mentioning there, that Nvidia news giving Nvidia a bit of a pop after hours. We'll get to more on that in just a few minutes with our Annabelle Jewelers. Global bond rates, though, are also a story that is in focus. It was in focus on Monday and potentially will continue to be as we see rising rates globally. That is in a week, of course, which is dominated by central bank decisions. There's also a number of Treasury auctions that we are paying close attention to. On Monday, we did see a better than anticipated auction of 3-year notes in the U.S. Potentially that signals where investors' appetites are, though. If we take a look at the U.S. 10-year yield, we are seeing yields still higher. The U.S. 10-year yield trading at about 4.1718 there about. And on Monday, we did see the U.S. 10-year yield hitting its highest since September. So still quite a lot of investors looking to pay attention to what exactly we hear from the Federal Reserve on the path ahead after this last meeting of 2025. Bitcoin is also on the board there, taking a bit of a brutal hit right now, down just over 1.51% there to trade below $90,000. And we also have Brent on the board, down just about 0.2%, but steadying after what was a pretty brutal day on Monday, where we saw Brent down, falling just about 2%. We're watching closely, of course, developments that are happening between Ukraine and Russia. There's also a number of key reports that are coming out this week, starting today, that will potentially give us some insight into what has been talked about quite a bit, which is a potential supply glut that many insiders are indicating for 2026. So Brent trading at about $62.34 a barrel there. Let's zoom in, though, on how markets in Asia are faring. Min Min Lo is standing by in our Hong Kong studio. Min Min, I know you've been watching the RBA decision. Give us some insight there.
Yeah, the RBA decision standing pat for the third time. Not surprising, as it comes against this backdrop of inflation ticking up, unemployment at historically low levels. So we had a cautious statement out of the RBA. But later on, the RBA governor, Michelle Bullock, gave some hawkish comments. She was saying that, she doesn't see the need for additional rate cuts. The question now is whether the RBA would go on an extended pause or a rate hike some point in the future. And we saw the reaction on the Aussie dollar, reversing the earlier declines here and now gaining by about 1/3 against the greenback. We are also taking a look at the Chinese market because we are digesting the second day sort of market impact here after the Politburo readout that we got yesterday, suggesting policy continuity when it comes to monetary and fiscal policy. The continued focus on expanding domestic demand, a focus on new quality productive forces. But some economists are saying that it's quite disappointing. There was no mention of the property sector as well. We can see onshore and offshore both declining here. We also have, of course, the story of the chips sale that has been approved. Annabelle will be talking more about that, but that really takes away the domestic substitution theme. We are seeing some chip stocks in China falling today as well. The 30-year bond futures, though, gaining by about 0.3% here over expectations that we could see a rate cut on the horizon sometime next year.
Min, thanks so much. Min Lo in Hong Kong. We'll check back in with you in just a bit. Let's turn back to our top story, though. President Trump has granted Nvidia permission to ship its H200 AI chips to China in exchange for a 25% surcharge. The move opens the way for the chipmaker to potentially regain billions of dollars in lost business from a key global market. For more, our Asia tech correspondent, Annabelle Drewlers, joins us from Hong Kong. So, Annabelle, this getting quite a reaction from a number of people watching closely. What more do we know about how this came about?
Well, it's really the culmination of what's been weeks, if not longer, months possibly, of lobbying efforts from Nvidia. But this has been the push really from, of course, Nvidia, but others in the industry to try and regain access to the mainland market. So H200 is something we've been discussing about this possibility for a few weeks now, but it was confirmed overnight by President Trump. He put out this post on Truth Social saying that he had spoken with President Xi of China about this, that he had as well had a positive reaction. But H200 is from the Hopper series. H20 is what was previously specified for the mainland market. H200 is actually a chip that was on sale to US customers, others as late as last year. This year we've moved into Blackwell architecture for the Nvidia series. Next year we ramp up into Rubin architecture. So already H200 is going to be behind what is the most up-to-date on the market and what's available for others. At the same time, H200 is the most advanced chips that China could actually get access to. It's far more advanced than what you see domestically right now. But the big question, of course, is what is the response from Beijing moving forward, given that when H20 sales were allowed to restart to China, actually you heard Beijing officials were telling Chinese companies domestically, don't purchase those chips.
So, Annabelle, on that, what do we know then about China's interest then in these H200 chips, especially considering what you were just mentioning there?
Yeah, I think it's sort of the big unknown right now. Nvidia is a company, back in their latest earnings, they removed any sort of hope of Nvidia revenue on the table. And so they don't actually have anything being priced in or factored in right now. It's going to be something just to watch going forward. We really don't understand just yet. As I said, the H200 chip, though, is the most powerful that China can currently legally access. It is a chip as well that's particularly good at inference capabilities. So you have chips that are sort of better suited to training, which is really building up those foundation models. Then you have inference capabilities, and that's when you have the deployment of AI. And so if they can access this type of chip, again, it just helps that movement and that deployment of AI technologies across businesses, across industries as well. So there is sort of a case for it on that perspective. On the other basis, though, again, given that China has just such a continued push about building up its self-reliancy, self-sufficiency in the semiconductor ecosystem, that part's not clear. So we'll have to just essentially wait and see how exactly China responds in the coming months ahead.
Annabelle Drewlers starting us off there. Asia Tech correspondent. Annabelle, thanks so much for your reporting. Now, for a look at some of the other stories we're following this morning. Paramount has launched a hostile $30 a share cash takeover bid for Warner Brothers Discovery days after the company agreed to a deal with Netflix. The offer values Warner Brothers at $108.4 billion, including debt, and tops Netflix's $27.75 cash and stock proposal. Paramount's offer is for all of Warner Brothers, while Netflix offer is for the Hollywood studios, HBO, and streaming business. Both bidders are likely to face an extended review by global regulators, something President Trump referred to when asked about the deal.
I have to see what percentage of market they have. We have to see the Netflix percentage of market, Paramount the percentage of market.
President Trump has signaled he could impose fresh tariffs on agricultural products, including Canadian fertilizer and Indian rice. It's the latest sign that protracted negotiations with two U.S. trading partners could drag on even longer. Two separate U.S. delegations are in New Delhi this week for talks, but officials say they don't expect any immediate announcement of a trade deal. And PepsiCo has announced a series of operational changes backed by activist investor Elliott Management. The moves include cutting nearly 20% of its U.S. product lineup, investing in more affordable products, and planning layoffs in North America. Elliott says the plan will drive greater revenue and profit growth. Now, coming up, Abu Dhabi plans a $16 billion expansion to add more offices, luxury homes, and retail space to its financial hub. We have the details on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Abu Dhabi has managed to attract the world's biggest financial firms and thousands of professionals to its financial hub in recent years. Now the city has announced it's planning a mammoth $16 billion expansion to add more offices, luxury homes, and retail space. Let's get to Bloomberg's Alex Duhler, who is the reporter behind this story and has the details. He joins us from Abu Dhabi Finance Week. Alex, what is this expansion and why exactly do we know why it's needed?
Hi Jennifer, thanks for having me on. So this is an absolutely huge expansion to Abu Dhabi's financial free zone. So it's a joint venture between Aldar and Mubadala Investment Company. So it's $16 billion or 60 billion dirhams, and it's going to massively expand the amount of office space, leisure space, and also retail facilities. So it's a massive win for Abu Dhabi.
Dig into that a bit more, Alex. I mean, how is this a win, especially if we consider Abu Dhabi's neighbor, Dubai, and what exactly could this mean for its positioning as a leader as far as financial hubs go in the Middle East?
Yeah, it's a very good point. So Abu Dhabi has been attracting hedge funds, asset management companies for quite some time now, and one of the problems that they had on the ground was that office space was running out, and a lot of people were looking to establish offices in Abu Dhabi, but there just wasn't enough office space. And Alan Howard yesterday from Reverend Howard, he was talking about how there's a lack of office space for them to expand in Abu Dhabi. So it's come at a really good time for hedge funds and asset management companies and banks to expand and to really house those workers in the heart of Abu Dhabi.
What are some of those funds telling you, Alex? You've been on the ground there for 2 days. What's their read into how this could potentially look like over the next few years?
Yeah, so there's so many new hedge funds and asset management companies setting up in Abu Dhabi, and I think the main pull is the access to capital. Abu Dhabi sits on $2 trillion of sovereign assets, and everybody wants a slice of the pie. So they're all setting up in Abu Dhabi, and there's not that much office space on Al Maria Island. So this is really going to help Abu Dhabi get ahead and start attracting more firms. And if you go down the road an hour and a half from here to Dubai and DIFC, that's expanding with DIFC 2.0. So there's this race between Abu Dhabi and DIFC to try and attract all these firms to their financial centres, and this is the first step to kind of winning that race on behalf of Abu Dhabi.
All right, Bloomberg's Alex Duhler joining us from Abu Dhabi Finance Week. Alex, thanks again for your reporting. Now, for a look at some of the other stories we are following. Balyasny Asset Management has applied to seek permission for an office in Abu Dhabi's financial free zone, ADGM. The firm expects to start operations in the UAE capital during the first half of next year. Balyasny already has an office in Dubai's International Financial Center. Binance has won 3 separate licenses from Abu Dhabi's financial regulator, granting the crypto exchange giant one of its most comprehensive regulatory footholds yet. The approvals cover Binance's regulated exchange, clearing infrastructure, and broker-dealer arm. Back in March, the crypto exchange landed a $2 billion investment from AI investor MGX, which is chaired by Sheikh Tahoon bin Zayed Al Nahyan. And coming up, we speak to AlphaGeo's Parag Khanna at Abu Dhabi Finance Week. Stick with us. That's next. This is Bloomberg. Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Israeli Prime Minister Benjamin Netanyahu will meet U.S. President Donald Trump on December 29th. Netanyahu's office says the Monday meeting is set to discuss the future steps and phases and also the international stabilization force of the ceasefire plan in Gaza. It comes after Israel said it expects to move to the next phase of the Gaza ceasefire plan soon. And the Financial Times reports Tony Blair is out running Donald Trump's so-called Board of Peace in Gaza. The publication says this follows objections from several Arab and Muslim states. The former UK Prime Minister was the only person identified for the board when Trump unveiled his 20-point plan to end the war between Israel and Hamas. But some Arab and Muslim states push back against Blair's position, in part because of his staunch support for the U.S.-led invasion of Iraq in 2003. The U.S. government is backing Iraq's plan to transfer Lukoil's stake in the West Kurna 2 oil field to an American company. This comes just days before a sanctions waiver on the Russian firm is set to expire. Iraq's oil ministry says it's approaching U.S. companies to take over the majority holding, with ExxonMobil and Chevron emerging as potential suitors. Qatar is establishing a new company called Quai to develop and invest in artificial intelligence. The AI entity will operate as a subsidiary of the Qatar Investment Authority. The new firm will focus on developing, quote, trusted AI systems and will work on evaluating and commercializing large language models and frontier tech-like autonomous agents. And Turkey's Pegasus Airlines has agreed to buy the entire share capital of Czech Airlines and its parent, Smartwings, as the low-cost carrier pursues expansion of its global reach. Pegasus says the deal with Prague City Air is valued at $180 million and includes the assumption of certain shareholder debts. The acquisition gives Pegasus access to Czech Airlines' fleet of 47 aircraft and a network spanning about 80 destinations. One of today's keynote speakers at Abu Dhabi Finance Week is Parag Khanna, founder and CEO of geospatial AI company AlphaGeo. He'll be mapping out what he thinks are the most important new trade and investment corridors shaping the future of the world economy. Bloomberg's Abir Abu Omar is with him now. Abir?
Hi, Jen. You're right. We're here on the second day of Abu Dhabi Finance Week, and joining me, as you had suggested, is Parag Khanna, who is founder and CEO of AlphaGeo. Parag, lovely to have you here with us in Abu Dhabi. We're gonna start by talking about Abu Dhabi in general.
Yes.
And one question that I've been asking a lot of the people that I've been running into over the past couple of days is, why Abu Dhabi? Why is there so much interest in coming to this part of the world when it comes to what you do? But also, we see at the ADGM here who's around. So, if you were to put in the appetite of companies coming in to Abu Dhabi, why do you think this part of the world is interesting?
Well, I think the story should start with what Abu Dhabi has done right over the past 50 years plus since the founding of the country. To be a central player in the world economy is not just a function of where you are or even how big you are, it's how connected you are. What Abu Dhabi has done for an entire generation plus is to get connected to the world. Infrastructure, capital markets, travel and tourism, business formation, being a leader in this region and then outward beyond the region. And so to be connected is the central element of success for any great city or any great country in the world. And the United Arab Emirates has now fully established itself in that position. And therefore, if you think about the entire planet, but break it down to which are the cities, the pulsating financial capitals of the world, there's only about 10, and Abu Dhabi is now very firmly one of those 10, and that's why the world has come here.
And Abu Dhabi, the UAE in general, is very big on trade, right?
Yes.
That was one of the, I remember in 2021, we covered a big story about the UAE wanting to expand trade corridors with countries that it hasn't tapped before. And you are going to speak briefly about trade corridors and investment corridors. Can you allude a little bit more to that?
And that also comes back to geography. Remember the central position that the United Arab Emirates occupies, being at the crossroads of Europe, of Africa, of Asia. Geographically, we call the Gulf actually West Asia, but in a way it's connected to the entire world. And so what the Emirates has done very wisely is to not privilege only relations with the traditionally dominant economic or manufacturing centers in the West, but also obviously rising Asia. This story is actually not new, of course. The commodity super cycle really began in the 1990s after the Cold War. So we have a 30-year history of this country in this region looking as much east as well as west, and as you well know, establishing itself in effect as the de facto capital of the entire global south as well. So in this sense, the Emirates is basically fulfilling its geographical destiny to be the center of the world.
And I just want to talk a little bit about AI. When it comes to AI, the UAE is a powerhouse. It houses G42, which is a massive conglomerate.
Yeah.
But when it comes to the UAE having to make a choice, and again, we reported in the UAE having to pare down existence in China to be able to attain US technology, do you think that the Middle East or the Gulf in specific is going to have to make a choice continuously, or is it going to be a bridge between the East and the West?
So the premise that you're raising, and it's not your assumption, but many people basically presume that this is zero sum, that you must choose sides, that there's a static volume and quality of technology distributed among two kinds of rival systems. You must choose one or the other. In reality, all technology in general, and AI in particular, is rapidly evolving. There isn't one place where the best foundational models, frontier models, where the best training and inference are done. It is democratizing. All technology democratizes. I think what the UAE has done very wisely, and G42 as well, is to not necessarily say we're going to pick one side or the other side. Sure, we may pare down here to gain this. We may pare down this to get that, but it's a balance. I call it multi-alignment. In the smartest countries, diplomatically, don't choose one side or the other forever. They have good relations with all sides. They procure the technology they need. They also develop in-house. This is also important. It's not just about being a place that is arbitrating between the two. It's saying what is going to happen here itself. That's also the strength of the G42 model and the UAE model, is to say we ourselves are going to be an innovator so that we ultimately will depend less on the rest of the world, and we will develop technologies that we will, of course, sell and market to the rest of the world. That's what the UAE is doing right.
Parag, thank you so much for your time today.
Thank you.
Jen, that was Parag Khanna, who is founder and CEO of AlphaGeo. Back to you at the studio.
Good stuff. Bloomberg's Abir Abu Omar speaking with Parag Khanna there. We'll get back to you soon, Abir. Thanks so much. Let's take a quick check at where your markets are positioned. As we mentioned, many analysts and investors, are watching closely to what we see from the Fed. So looking like a bit of sideways trading activity right now. U.S. equity futures marginally higher on the day. Euro stock 50 futures as well trading marginally sideways. Plenty more ahead, including the DWS Group CEO. That is next. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. A win for Nvidia. President Donald Trump approves sales of their H200 AI chips to China, with the U.S. to take a 25% cut of the revenue. Takeover battle. Paramount launches a hostile cash takeover bid for Warner Brothers just days after the studio agreed to a deal with Netflix. And we will be speaking to Stefan Hoops, CEO of DWS, and Circle's CEO, Jeremy Allaire, live from Abu Dhabi Finance Week. But it has just gone past 9:30 a.m. across the Emirates, 7:30 a.m. here in Johannesburg. I'm Jennifer Zabasaja in for Jumana Bersechi, and let's just take a look at where markets are positioned ahead of the trading day as Tuesday gets going. We're seeing a bit of sideways activity as far as U.S. equity futures are concerned right now. S&P futures pointing slightly higher, though we did see most of the U.S. equities indices closing lower on the day on Monday, with tech being the only sector performing, closing in the green, actually. And after hours, we did see Nvidia getting an additional bump after that news from the White House on those H200 chips. The U.S. 10-year yield also pointing higher right now. Monday, the price action was really dominated by global bond rates and some of the activity that we were seeing there, especially ahead of a number of central bank decisions and Treasury auctions, including one that we did see in the U.S. For 3-year notes that actually went better than anticipated. The U.S. 10-year yield, though, saw its highest level since September on Monday, right now trading at about 4.1741. We also have natural gas on the board, down more than 1%, continuing its decline after falling the most in 5 months. Part of that price action can be attributed to some of the forecasts that had previously anticipated colder weather for mid-December. It's now potentially looking a bit warmer. We're also, as we mentioned, waiting for a number of energy reports coming out this week, potentially getting some insight into what the demand picture looks like. And we also have Brent crude on the board right now, down about 0.3% there after falling nearly 2% on Monday. We are waiting for some of those key reports throughout the week and also waiting for some of the developments on Ukraine and Russia and the conflict there and potentially how that could impact the energy picture. Brent crude trading right now at about $62.31 a barrel. Let's zoom in, though, on how markets in Asia are faring. Min Min Lo is standing by in our Hong Kong studio. Min Min, what are you watching?
Hey, Jen, we're taking a quick look at Japanese markets today because the Ministry of Finance had auctioned the 5-year bond today, and demand was pretty tepid as expected given the curve flattening theme that we have been seeing ahead of this expected BOJ rate hike in December. So demand was below the 12-month average, and here we can see the 5-year yield actually not doing a whole lot. And our MLife strategist Mark Cranfield believes that the 5-year yield could continue to tick up towards that 1.6% level. Stocks as well not doing a whole lot. Even that positive news of Nvidia getting approval to sell chips to China, that it seems is not enough to lift the tech-heavy Nikkei index here. The yen is stabilizing a little bit after the sell-off that we saw yesterday following news of the big earthquake in Japan. Flip the board, we're taking a look at broader markets in Asia, and it is largely a down arrow story across all markets today. It seems like there's a lot of jitters as we look ahead to that Fed rate decision happening. I guess we'll see markets reacting in Asia on Thursday. A lot of anticipation as to what the rate cut path in the future is going to look like. Kospi down as well. SK Hynix, a big decliner on the Kospi because the Korean exchange had issued an investment caution for that particular stock. After the blistering rally that we saw on Monday, it was up 6% on Monday over speculation that the company could be issuing US ADRs, but that has not been confirmed by SK Hynix, and we are seeing the Kospi now down by 0.4%.
Yeah, definitely looking like a risk-off picture. Min Min Lo in Hong Kong for us. Min Min, thanks as always. Now, Ukrainian President Volodymyr Zelenskiy says negotiators discussing a U.S.-brokered peace initiative remain divided over territory, including control over eastern regions. He says the talks have yet to yield agreement on Ukraine's Donbas, with different visions from the U.S., Russia, and Ukraine. Tony Halpin leads Bloomberg's economy and government coverage of Russia. He's joining us now from Dubai. So, Tony, how much progress have we actually seen over the past few weeks towards a deal after President Zelenskyy's meeting with Ukrainian leaders that we did see over the past few days?
Morning, Jennifer. Well, they're inching forward on two key issues, which, as you've identified, the first one is the question of territory, the amount of eastern Ukraine that President Zelensky may be pushed to give up. Russia wants to control the whole of this eastern Donetsk region of Ukraine. Currently, it controls only part of it. The part it doesn't control is heavily fortified, and Ukraine is unwilling to cede that territory for security reasons under any ceasefire agreement. And secondly, there's the question of the nature of the security guarantees. Ukraine wants security guarantees that are legally binding and endorsed by the US Congress. So far, the US is offering something like a framework of security assurances, and Ukraine isn't really reassured that that will be enough to deter Russia in the future.
Are we seeing Europe getting any clearer on what exactly financial support would look like for Kyiv?
Yes, they said yesterday that they were making progress on a deal to provide something like 90 billion euros for Ukraine, and that money is essential for Kyiv because they need it to continue providing basic services, to pay for their military, and they need that money pretty early in 2026 to carry on the fight. European Union leaders will meet next week, and they need to reach an agreement on using frozen Russian assets to support Ukraine. But from the mood music that was coming out yesterday, there is some progress on that, and people are pretty hopeful that maybe there'll be a deal even before Christmas.
Wow. Bloomberg's Tony Halpin in Dubai with the latest for us. Tony, thanks so much for joining us. Now, Deutsche Bank's investment arm, DWS Group, opened a new office in Abu Dhabi in October, joining a growing list of global money managers looking to tap into the region's rapidly growing wealth. Let's head back to Abu Dhabi Finance Week, where Bloomberg's Abir Abu Omar is standing by with Stefan Hoops, CEO of DWS. Abir?
Hi, Jen. Yes, we're continuing the conversation today and into tomorrow as well. And I will be having a conversation with DWS Global CEO Stefan. Stefan, thank you so much for joining me today. We were just talking about you cutting the rope yesterday to opening up your office just here at the ADGM. So again, a question that I've been asking is, Abu Dhabi, you got the regulatory approval. Why Abu Dhabi?
Well, firstly, it's nice to be in sunny Abu Dhabi. And look, while people refer to Abu Dhabi as the capital of capital, we actually think of it as one of the last proper global melting pots of cultures. And I mean, just yesterday, I spoke to clients, to colleagues, to peers from the US, from Russia, from China, from South Africa, Israel, Europe. And quite honestly, I mean, there's no other place on the globe where you can currently have that broad of discussions. So that's why we want to be part of this ecosystem.
And you were just telling me that you have a handful of people. Are you looking to expand operations? I assume in the beginning you'll be serving a clientele that is Middle Eastern based. How does that sort of strategy grow into the region going forward?
You're exactly right. So the first step was really to have the coverage folks that advise the clients in the Middle East from here. I think second step would be for assets that are managed, let's say infrastructure from the GCC, for that to be managed from here. I think a third step, which I would also like to be more ambitious about, is for people who simply want to be here because it's a fun ecosystem, let's say research that could work from anywhere in the world, IT, to also be offered a potential role here in Abu Dhabi.
Something that that we as a newsroom have reported extensively on is the life cycle of Abu Dhabi, but also Dubai as asset management hubs. But what seems to be the case is a lot of people are coming to this region and investing money from here as opposed to investing money in here. Do you see your strategy being a little bit different? Are you looking to invest inwards?
No, I think the first step is definitely capital from here. Let's say in our case, we want to function as a gateway to Europe. Right. Where for those investments in Europe, we want to be the go-to asset manager. Now, I think if you just think about supply and demand, there's definitely plenty of supply of capital here. So it's not obvious that there's global capital needed. However, people across the globe obviously recognize the great potential, foresight, but also the implementation that's happening here on the ground. So there's definitely more interest in infrastructure investments here, in real estate, but also private debt or private equity.
And, speaking of partnerships and investing in Europe, you recently announced, I think it was last month, a partnership between Deutsche, yourself, and Al Merkab family office in Qatar to invest, to allocate capital in Europe. Should we expect to see more of these investments or more of these partnerships, perhaps with Abu Dhabi?
So I'm probably somewhat biased when speaking about Europe, right? But let's recognize that European stocks this year have beaten US stocks for the first time in quite some time. So, the potential of Europe has been long recognized. And I think what people across the globe are now seeing, that we actually properly fulfilling our potential, are taking proper decisions, are implementing change like the debt rate release in Germany. And that's why people are excited about the outlook for Europe. Now, that specific mandate was essentially an opportunities mandate for Germany, where the investor is going to invest through us into German infrastructure, real estate, small mid-caps, and a variety of other investment opportunities in Germany.
And then one final question for you about, the global macro environment right now. There's a lot of geopolitical tensions happening, whether it's in Europe, the US, or even in the Middle East. Does that at all factor into your strategy of investment, perhaps if we compare it to 10 years ago versus now?
It does. And look, just yesterday, what I like so much about here, all of us have our own biases. But if you speak to people from all over the world, like you can do here, then you get a pretty balanced view. And the key themes were certainly that people have a pretty optimistic outlook for next year. People believe that while 25 was the year of global geopolitics, next year is going to be more domestic, more regional. And there's a lot of focus on digital assets, and all of that obviously factor into our decision and our strategy here in Abu Dhabi.
Great. Stefan, thank you so much for joining me today. Jen, that was Stefan Hoops of DWS. Thank you. And back to you in the studio.
Thanks. Bloomberg's Abir Abu Omar with Stefan Hoops, CEO of DWS. We'll get back to you in just a bit. Thanks so much, Abir. Now, coming up, we're going to discuss the path ahead for stablecoins with Circle CEO Jeremy Allaire at Abu Dhabi Finance Week. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Stablecoins surged into the spotlight earlier this year, reshaping markets and stirring debate over just how big this digital dollar revolution can become. Let's go back to Abu Dhabi Finance Week, where Bloomberg's Abir Abu Omar is standing by with Jeremy Allaire, CEO of Circle. Abir?
Hey, Jen. So back with another interview. This time we're going to be talking a little bit about crypto, stablecoins, and here with me is Jeremy. Jeremy, thank you so much for being with us today. Now, let's
My pleasure.
start with a question about you setting shop in Abu Dhabi. You're here. You came here yesterday. You've got the FSP from the ADGM, where we are today. Talk to me a little bit about that and why you decided now is the right time to set up presence in Abu Dhabi.
Yeah, Abu Dhabi actually and ADGM has been at the forefront of establishing policy in this area of digital assets. In fact, in 2018, they were the first regulator to acknowledge and permit USDC for use by financial firms in the ADGM. So we've had a chance to engage with the regulators here for some time, and it's a tremendous milestone for us today to be able to go operational and launch. This is after a year where stablecoins have become one of the most important themes in the changing financial architecture, and really importantly, cross-border transactions as one of the killer apps of stablecoins. And what we see with UAE in particular, and then obviously with ADGM as a regulatory regime, is this is becoming a central hub in cross-border finance, in cross-border transactions. And so in some ways we can't think of a better place for not just this region, but increasingly even facing more and more parts of the world to be able to get this infrastructure up and running.
So before we talk a little bit about the wider crypto industry, I just want to press on a point about the regulatory environment in the wider UAE. It's not just Abu Dhabi, because Dubai also has a regulatory environment that is favorable to investors and a company heads such as yourself. Can you talk to us a little bit about what the regulatory environment looks like here versus other places in Europe or the US?
Yeah, one of the things that's happening right now is sort of major jurisdictions everywhere are putting in place regulations for stablecoins, which is really the core of what we do, but also digital assets more broadly. And UAE has been at the forefront of trying to create clear rules, pragmatic rules that will work for industry, but also deal with the core risks that are there, and I think continues to be in a leadership position. And so, a very strong presence and kind of strategy coming out of the region here. And look, we're in the early days of this, and so there's more novelty, more new technology, and I think UAE regulators have demonstrated that they can be agile in responding to these new technology developments, and so that's broadly what we see.
Sure, and then we obviously need to bring up Bitcoin and the crash that happened in crypto assets earlier in November. So it's weighed down on the stock of your company, but also some other companies that share the same sphere. Can you talk to us a little bit about where you see Bitcoin now? You've been pretty optimistic on it in the past. Do you think it's just a cyclical correction, or is this a typical boom and bust cycle? What are your thoughts now?
Yeah, so I'm personally less focused on what's the price of a crypto asset. I'm much more interested in how are we progressing as a technology, and that's really what matters. There was the .com movement bust, and there were all these different phases, but fundamentally, blockchain networks regulatory frameworks and the innovation on the technology is just constantly moving forward right now, and I'm more optimistic than I've ever been about how this is going to continue to penetrate our global economic and financial system. So I think we're in a very, very strong position right now, both Circle specifically, but then more broadly, this entire industry. And so I wouldn't pay much attention to short-term deleveragings or price movements. I don't think it's a very good indicator of kind of where we are with the progress of this technology.
Sure. So on stablecoins specifically, do you still think that long-term and in a consistent manner, they still provide a safe haven for investors?
Yeah, I mean, look, the Genius Act in the United States puts in place a very clear set of strict rules around stablecoins and their backing and their safety and their kind of supervision. And with that, which Circle is designed in line with those new rigorous federal laws, that creates a model where these dollar digital currencies really are a safer form of money than even commercial bank money, and a very, very safe, full reserve kind of dollar money. And we think that with these regulations, it strengthens that further, and that will lead to even further kind of promulgation and adoption of technologies like USDC.
Jeremy, thank you so much for your time. Jen, that was Jeremy Allaire, CEO of Circle, here with me in Abu Dhabi. Back to you in the studio.
Really interesting stuff there. Bloomberg's Abir Abu Omar at Abu Dhabi Finance Week, digging into some stablecoin and crypto activity there. Now, coming up, Nigeria and other West African states step in to support President Patrice Talon after a group of soldiers attempted to seize control of Benin. We'll have that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. The U.S. is backing a Moroccan company that seeks to produce a key chip material. Sundiale plans to produce a highly purified form of silicon used to make semiconductors and solar panels. The company has secured more than $4 million from the U.S. International Development Finance Corporation as Washington seeks to line up alternatives to China, which produces more than 90% of polysilicon globally. And South African prosecutors say a state radio presenter helped recruit people to fight for Russia in its war against Ukraine. The SABC DJ and 4 co-accused were granted bail just over a week after their arrests were made. The case adds to growing concerns about Russia's efforts to enlist fighters across Africa. The trial is set to resume in February. Now, Nigeria and the Economic Community of West African States have sent military forces to Benin after an attempted coup against President Patrice Talon. For more, we're joined by Bloomberg's Ndiro Oganga in Kigali, Rwanda. So, Ndiro, what is behind the swift response to the coup attempt in Benin? Walk us through some of the activity that we saw.
Good morning, Jennifer. At some point, you have to do something or risk losing legitimacy, and that's the situation that ECOWAS, under the leadership of Nigeria, finds itself. This is a situation where, since 2020, the region has experienced 9 coups. And if Benin would have been a success, that would have made it 10 successful coups in a period of less than 5 years. And so they felt the need to act. And this is not the first time that we are seeing Nigeria and ECOWAS intervene in some of these countries. In 2016, when Yahya Jammeh of Gambia refused to accept his election loss, we saw Nigeria send troops. Also in Niger, when the junta ousted President Mohamed Bazoum, ECOWAS threatened military intervention. However, in that case, we saw Mali and Burkina Faso rallying behind Niger and saying, "We dare you." And even though in that instance they did not intervene, if you look at what has happened, particularly in the last week of November, leading to the first week of December, we've seen 2 coups, a successful coup in Guinea-Bissau and a thwarted coup in Benin. And so the pressure to intervene is actually mounting, because if you look at the coup belt across West Africa. It's growing all the way from the Atlantic Ocean leading to the Red Sea. And this intervention in Benin is not just Nigeria. There are troops from Sierra Leone, there are troops from Ghana, Ivory Coast. And their goal here is to ensure that constitutional order is restored. The threat is still large because many of those who were part and parcel of this coup are still at large. They've taken hostages. And the threat still lingers because even though the Minister of Interior came out and said that the coup had been thwarted, on Sunday there were still gunshots being had near the presidential palace. Some of the grievances that these soldiers raised, economic mismanagement, abuse of power, are still very valid. And so who's to say that it will not happen again? That is why they need this military reinforcement.
Absolutely. It's quite a story that we've been watching over there. And Indira, let's just stay in West Africa and take a look at what we're seeing in Ivory Coast. President Ouattara sworn in for a fourth term. What exactly did we hear from him?
That's also another interesting case. It's just a situation where a president has ensured and tinkered around with the constitution to entrench himself in power, but he has a good scorecard, and he's looking to build on that. He's looking to expand mining, make Ivory Coast an energy hub of West Africa. He's also looking to increase the contribution of manufacturing to GDP, and also he wants to grow the country and leave it as an upper middle class by the year 2030. Diplomatically, this is a country that sits in a region that is embroiled in a lot of political volatility, and he's trying to maintain neutrality and say that Ivory Coast is a friend to everybody in the region. And if we just look at his track record the last 10 years, he's done really well, and he intends to keep building on that. However, he needs to expand the political space.
Bloomberg's Indira Oganga in Kigali, Rwanda. Thanks so much, Indira, as always, for your reporting. That is it for Horizons Middle East and Africa. I'm Jennifer Zabasacha in Johannesburg. Stick with us for Daybreak Europe. That's next. This is Bloomberg.